I'm surprised that it's the lowest percentage we've seen, but I'm not surprised that people aren't feeling particularly optimistic about stocks. We keep talking about a recession coming. We keep lining up all of these things that are in our face. What I am actually a little bit surprised about is that there's so many people that are still wanting to invest in real estate at a point where housing affordability is going down and we've got rates rising and home prices are at all-time highs. So that is probably the most surprising aspect for the whole survey for me.
I mean, you know the next question is going to be, because if there's so much negativity, whether that in and of itself is a contrarian indicator like, Scott Minerd and others have suggested. What do you think about that?
Yeah, I mean, if you look over history, usually it is a contrarian indicator. What I would say to people, and I know you've talked about this a lot on the show already, and it doesn't make good TV to just agree with everybody else, but I do agree. 60-40 is not dead forever, and bonds are looking attractive here. We have a 2-year yield that's still pricing in 8 hikes this year. I don't think they get there. I don't think they have to get there, which would be a rally for stocks. And it would steepen the curve. So if you see the 2-year rally a little bit and you see whether it's a dovish pivot or just that the 10-year hits a cap, that is going to be good for stocks. Now, it's different what you want to buy in this environment and how you want to be positioned. I do still think we have a lot ahead of us. We've got midterms. That's usually not good for the market. So you do want to have defensives in the portfolio, things like consumer staples, utilities, dividend payers. But you also want to look at things like healthcare, which I won't call them recession-proof, but healthcare is a sector that's not as sensitive to rates. It is thought of as a defensive sector, but it can still produce growth in biotech and pharma. So I would look at that as a good opportunity, too.
Steve, you sort of alluded to this at the end, but before you made your way over to the camera. I mean, these really are just moment-in-time surveys, and things can change pretty quickly. In other words, put a few days, put a few weeks of positive markets together, then go back and do the survey, and then you tell me what the results would be.
You're 100% right, Scott. We do capture a moment in time. I think this has probably been gathering. People have seen some losses. They've seen the volatility. I also think, as I said at the very beginning of my report there, Scott, that the overall sour economic mood, which is very much colored by inflation, affects these views on the stock market, that people have this connection. The economy and the stock market are kind of the same thing, and they don't think, critically or analytically the way Liz is kind of telling you that, hey, there are certain places where you can still make money despite what may happen to the economy. We could come back later and it would be a better one. But though, by the way, I will say sometimes that those attitudes of Americans have done a pretty good job presaging where the market's going, and sometimes they just follow where it's been.
I try and read the tone, Steve, and the way that people say things, and the way that you delivered the crypto news sounds to me like maybe you were most surprised by that outcome and how close it was to stocks.
I was very surprised by that, for sure. I thought we were kind of wasting. I have to be careful because I only have a certain amount of questions on this survey because it's a real telephone survey. It's a very expensive survey, if you will, to call and not do it online these days. We do it the old-fashioned way, so to speak. So I was thinking, maybe I'm going to get 2 or 3 or 4%. Maybe I thought 8% of the public would think that crypto was a good thing to invest in. 14%, and I don't know if it's going to stick around. But one thing we did, Scott, we sort of very early on in 2008 or 9, we started seeing this online shopping thing show up. Now, of course, and it entered just like that. It's kind of sneakily at 14%. Now, of course, online shopping is the biggest one. So there it is coming in at 14%. I was also really surprised, Scott, because I thought crypto was a place that people would think more of as a gold replacement. I'm not sure that's true when I look at the demographics. So I love doing this stuff and seeing things I didn't know before about what the public thinks about these things.
And I can't help but notice, Liz, I'll give you the last word, right? Treasury's pulling up the rear right at a time when some are suggesting that bonds are finally a good investment, perhaps even better than stocks.
Yeah, and I think that that's indicative of a contrarian signal. I do think that bonds are oversold here. I'll go back to the crypto and gold conversation, though, too. Also, I want to know what happens to people between the ages of 34 and 65, because there was a big gap in what they do.
I'll get you that data, Liz.